Welcome back. You're still with us on Markets Today. Let's get to all of the other top stories that we're tracking for you this evening. The fourth headline today, Vedanta slipped in trade after sources told CNBC TV18 that the government was opposed to Hindustan Zinc's buyout of Vedanta's global zinc assets. However, the stock recovered in the last hour of trade to close flat. Sources say the centre believes that the decision was not in favour of minority shareholders' rights and violated corporate governance norms. Sources also told CNBC TV18 that exchange filings were done despite that government-appointed directors' objection to the transaction. Earlier today, in response to the story, Hindustan Zinc filed a clarification with the exchanges that the incorporation of international zinc assets was approved by the board and was an attractive opportunity for overseas growth. The company also said that it is not aware of any information that had not been disclosed to the exchanges. All right, moving on, Paytm was in focus. It jumped 5% following what was an upbeat conference call and a potential ban on other lending apps. Abhishek Kothari is here with the details.
Well, the company did have a con call in which the key highlights are that they expect the long-term payment process margins to stabilize around 5 to 7 basis points. So they see massive growth in subscription business, and there is massive opportunity in that segment for the company going ahead as well. The device run rate is about 30,000 every month, which is expected to improve further as and when the headcount actually increases for the company. So the financial services revenue now contributes about 22% of the overall revenue and is expected to improve going ahead as well. The guidance for lending business is that it will have a growth of 20 to 30% on a quarter-on-quarter basis. So it's on a sequential basis that they will see a growth of 20 to 30% over there. The company is planning to launch a UPI Lite app which will allow instant small value UPI transactions to take place. So there is potential for 10 crore merchants as well as 50 crore payment customers in the near term as well. We also have another development which has taken place. Now, industry sources have told CNBC TV18 that MEITY is likely to send a list of digital lenders to be removed from the Play Store and Google as well. So they have recently blocked about 138 betting and 94 loan apps with China links for their alleged involvement in money laundering. So both these two developments have been working in favor of Paytm in trade today. Back to you.
Okay, all right, Abhishek, thanks very much for that. So that's on Paytm. But the fifth headline today, Muthoot Finance was down over 2% in trade despite improved net interest margins and steady growth in assets under management. The gold financer witnessed contraction in gold tonnage amidst higher prices. Listen in to what George Alexander Muthoot, the MD of the company, had to say.
The pressures are coming down. We are able to grow our business. Maybe we have steadied the business. The AUM growth is steady. Is now steady. The profit is also steady. What we had a very good year last year. Now we are able to regain that profit, and hopefully this year we should be able to do better. Or this next quarter we should be able to do better than this quarter. AUM has also started inching up. Probably the 1% can go up to 5%. That I think that is what we should see in the end of the year.
Okay, and moving on, Balaji Mines was down over 5% in trade after it reported what was a weak set of numbers. The company is also eyeing revenues worth around 4,000 crores by FY25, expecting contribution from new projects. Sonal is here with the details.
That's right. Balaji Mines posted a weak set of numbers, hit a 52-week low in today's trading session, and that was on the back of weak set of numbers. In quarter 3, revenues were up 4%, but EBITDA declined by 18%, leading to a margin contraction of almost 600 basis points to come in at 22%. Profits also for the company were down by 17.5%. The management said that the fall in margins was primarily on account of degrowth in the pharma and API segment. However, going forward, revenues will start kicking from the new projects that the company has announced, and that will lead to growth as well going forward. They said in the next year they are going to see improvement in raw material supply as well, and that is something which will improve margins. In fact, we spoke to the management earlier today. Listen in to what he had to say.
After commissioning these 4 projects, yes, we are aiming to touch 4,000 crores in 2025. See, FY23 we have guided around 2,400, but still we are ahead of 2,400. We'll be doing between 24 to 2,500 this year. Next year, 2024, it should be around 2,600 to 2,800.
Okay, so a weak stock reaction for Balaji Amines, but let's move on. The business data for the insurance industry for the month of January is out. The premium for the life insurance segment has risen by 20% on a year-on-year basis, while for the general insurance space, the premium is up by 19%. Yash Jain is here with the key highlights. Yash.
Well, Ekta, first of all, of course, a good, strong number from the life insurance industry. The industry growing at 20% on a year-on-year basis, up to Jan growing at 30%. And this time, contribution has come from both LIC as well as private players. The strongest contribution came from HDFC Life. January premium grew 20%. Premium up to Jan was up 7%. The retail AP in January was also up 17%. ICICI Prudential Life, January premium up 14.5%. Retail AP just about 1% gain. Max Life January premium up 14.5%. Retail AP grew about 9%. SBI Life January premium grew at 32%. The January retail AP also saw a growth of 7.5%. LIC, the premium in the month of January was up 20%. Up to January, also the premium is up about 14%. As far as general insurance data is concerned, there was a strong bounce which was seen in New India Assurance. New India Assurance January premium grew by 42%. The premium up to January was also up 6%. For ICICI Lombard, the premium in the month of January is up 16%, and up to January about 20% growth seen in the premium for ICICI Lombard.
Okay, all right, Yash, thanks very much for that. So that's on the entire insurance space. But with that, it's a wrap on this edition of Markets Today. Thanks very much for watching.